Hi everyone, I hope you're doing well. Obviously there's something a little bit different today. The camera has moved from where it's normally is like over here to down here, because what happened is when I recorded my 10 US stocks to watch video, I finished recording the video, I got my microphone and I left it on the floor, went out the room, totally forgot about it, came back in and I forgot it was there, and I stood on the microphone and it broke it. And yeah, so I've got pretty much no microphone, and if I was to record the video in the normal location over there, basically there's too much static noise and the audio isn't great, so I've had to pull the camera closer because it's using the built-in mic just to make the sound so much better. So yeah, it's kind of like my own fault for leaving stuff on the floor, but yeah, I thought I had to bring it closer just for this video. So there's a new microphone coming. It should come probably later this week, maybe early next week, so maybe this video and the next video will be here instead of the normal place, but we should be getting back to where it normally is sometime soon. But I mean, if you enjoy the videos being down here instead of up there, then I could do it down here in the future, but I think it's better up there. But let me know if it is better down like in the location where it is right now. But yeah, not obviously normally I'll be going back up there to record videos and be using the whiteboard for the videos. Now today we're going to be talking about WH Smith stock and is this a buy? And at first I was kind of like really negative on this stock, because you know what I'm like with like high street retailers. I'm like normally like stay away from them. The footfall in like shopping centres and the high street is going down, and especially someone that sells books and magazines, newspapers, you know, them sales are decreasing as well. So straight away I'd be like, this isn't a buy. But I actually got into this company, and when I looked into this company, there was more and more I was starting to like with this company. So we'll get stuck into WH Smith stock, and as always guys, smash that like button if you can, that'd be absolutely amazing, and we'll get stuck into the stock today. So obviously WH Smith's is a high street retailer of stationery, books, magazines, and obviously that was kind of a red flag straight away for me, because I'm like, you know, magazine sales are dropping, newspapers are dropping, high street's dropping. So I thought straight away this company's, you know, going to be an awful company to look into, and I'm probably not going to buy it. But there's actually, as I got more and more into it, it actually kind of interested me a little bit more. So the stock is currently £11.50 as of recording this video. The ticker symbol is SMWH, and the stock's down absolutely huge. The stock's actually down 56%, and it hasn't really recovered with a lot of the other stocks that have kind of pulled up. This one's still kind of down. Obviously it's due to the COVID-19 and the stores being shut, but hopefully they'll start opening up really soon, so it's kind of past the worst part for it. But the stock's shown no signs of recovery, and the stock is now down at 2014 prices, which kind of says how much sold off this actually is. And 2019 was a fantastic year for the company. We'll get stuck into it, but it had fantastic growth, and you kind of see that in the stock chart, and it's just kind of all lost all of that over what has happened to the COVID-19. So I think this stock is kind of showing that it's still, you know, massively sold off compared to a lot of the stock market right now. On Super Wall Street, it is 24% undervalued. The P is 12, which is kind of like average for this kind of industry, but this company offers a little bit more with its growth. So I reckon it's a company that deserves to trade up to a P of 20 potentially. So I would say that P is, even though it's average for the sector, I would say it's quite low for the company as well. I like to say it had a good 2019. You look at the growth, we'll get into the reason why it had so much growth. But yeah, it had so much growth on the revenue, and you know, we're dealing with a company that potentially offers, you know, a decent little revenue and profit increase, which is fantastic. The company itself had an actual pretty good balance sheet, but it's actually been buying other companies out, and it has now 45 million cash and 445 million debt. So the cash isn't exactly what I'd want in a company compared to that debt. You know, the balance sheet could be a bit better, but it did have a balance sheet, and with it buying out these companies, and we'll get into the companies who they bought out, but I think it's actually a good move for the company. So I'm going to let the balance sheet go a little bit just because of the, you know, the acquisitions they made. I think they'll pay off for them in the long run, but it did have a better balance sheet at one point, so it's worth noting that down. Now there is insiders buying this, and this includes the CEO, which is a really good sign. You know, I like seeing companies where the insiders are buying. It's kind of like, if the management are backing up what they think about the company, they know what's going on in that company more than anyone else, and if they're willing to put their own money into the company to buy shares, that's a really positive sign for me. So yeah, insiders buying is always a big thing. It was a little bit of a dividend stock, but it has had to cancel its dividend. Totally makes sense. I mean, when your stores aren't open, it's not, you know, clever to keep paying that dividend. Save your cash, and then eventually it'll get to a point where it can pay that dividend again. So that's totally fine that it's cancelled its dividend. And as well as owning the WH Smiths brands, it does own a couple of other brands. Funky Pigeon being one of them. I actually didn't realise that until I looked into the company, but yeah. And obviously when we get into like the investors relation, we can see this company is kind of divided into 2 points. So it's got its high street shops, which I was obviously really like, negative about. And when you look into the company, the high street is struggling to grow. They're just basically trying to keep the revenue and profit flat line, try and improve them profit margins. But the big thing for this company is the travel side of it, and having stores in areas of travel and travel retail. And the way they do this is, train stations, airports, having WH Smith stores in there. And I didn't really think about it until now, but when you're in a train station, when you're in an airport and you're kind of waiting for your train or your aeroplane, you got maybe an hour to kill, maybe even more than that if you're in an airport. What do? You kind of think, oh, you know what, I'll go get a quick drink from WH Smith's, I'll go get a magazine, I'll go get a book. And when you think about it, you actually go into these stores in airports, in when you're going on the train just to get a quick lunch. And actually, this sector is growing absolutely fantastic for the company. And it wasn't until I actually thought about it, I was like, yeah, actually, there's a lot of potential in this area. And this is where WH Smith is trying to push a lot of its revenue growth right now. And it's really paying off for them, because in 2019, it was absolutely fantastic. So just to put that into perspective, travel made up 817 million in 2019, and that was up from a previous 672 million in 2018. So that was a massive increase. Profit was up 14% in this sector as well, and it's kind of like it's realised that it's kind of maximised its potential in like the UK travel area. So to get more retail space in the travel industry, because you think about it, not a lot of these retail locations come up in these airports and train stations that often. It's trying to increase its international growth up as well now. And that was up 91% on revenue, which is fantastic. 91% growth on a stock like WH Smith in one of its sectors. Fantastic. And to do this, like earlier, I said on the balance sheet, it's been buying companies out. It's been buying 2 companies, and these 2 companies are US companies, and one of them was called Emotion, and one of them was called Marshall Retail Group. So to get more US footfall incredibly quick, the best thing to do, rather than waiting for these spaces to come up in these travel locations, is to buy companies that actually have locations already. And these companies were 2 profitable companies that were in the US. Made sense to go buy it, and they're paying off for the company already, which is fantastic. And it looks like the plan is to get more and more international space going forward. So you can see where the growth is going to be from this company, and it looks pretty good. It's a company that also likes returning a lot of cash back to shareholders. It's done this by dividends. It's also done this by buybacks, which has been absolutely fantastic. And when you think about this company being at 2014 prices, and it's made all these steps forward in the last kind of couple of months, last couple of years, it doesn't look too bad, does it, this company, to say that it's on a big massive discount and it's 2014 prices, and we've seen this good growth from the company. I thought it was quite interesting. Now, I have made this video once already, and that was when I realised I broke my microphone. So on that video, I said, oh, I might potentially thinking about buying it. But now, because I'm recording this video again after I broke my microphone, I actually go and buy shares in WH Smith stock. So from my kind of view, why I got into this company is I see potentially maybe getting at least a 50% upside on this company, maybe a little bit more, but I think it's definitely undervalued. Like, it should be back at 2019 levels at some point. So even a 50% gain on this stock wouldn't see it at 2019 levels. It would see it still below it. So I think a 50% gain would be a fair shout on this one. Still not seeing the recovery when it should have, when things are starting to open up as well. So I think there's, this one's definitely undervalued, and definitely taking it as a little bit more of a, not as a long-term investment for sure, but definitely a bit more of a swing trade. I see an undervalued stock here, a good undervalued stock, so it makes sense to go buy a little bit. So I did buy a small position, left myself a little bit more room to buy a bigger one if it does go down. But yeah, I thought I'd make a video on WH Smith stock and saying that I bought it. If you want to keep up to date with like trades I'm doing in the stock market, up to date time, there's a Patreon link down below. If you join that group, there's a Discord group where we're always talking about, UK stocks, US stocks. I'm always posting like when I'm buying stocks in that Discord group. Also on the Patreons page, I'm putting like some exclusive content on that kind of page as well. So yeah, I think it's worthwhile as well. It's a good little thing that's starting to grow, and hopefully can make it the biggest UK stock market community out there, which is kind of like the aim really. So I thought I'd update you on WH Smith stock, guys, and saying that I did buy the stock, and for me, yeah, at these sort of prices I do rate it a buy. So I thought I'd update on that one because it was a bit of a surprise, because it's a company that I didn't think I'd get in with, it being a high street retailer, but there we go. I do think there's a little bit of potential in this company, especially when it's you know, at 2014 prices as well. So that's the video today, guys, talking about WH Smith stock. As always, if you can smash that like button, that'd be absolutely amazing. Subscribe if you haven't, and I'll see you in the next video.